And yes, we are again here today. Today is going to be me and Alexander to discuss the economic data release on the UK claimant count change for March. However, we also have claimant count rates coming out, which is basically the same thing, but shows the percentage change. So I am going to show the charts of both of them on the whiteboard. But let's start with the UK claimant rates chart. Let me just put the historical chart on the whiteboard, and then we might start, because first of all we'll have a look what happened over the last years in general, and then we'll come to this month's reading too. Okay, so what we can see here, first of all, the claimant count rates is released by the National Statistics, and it's a monthly measure of unemployment that indicates the health of the UK labor market. If the rate is up, it indicates a lack of expansion within the UK labor market, while it indicates economic expansion and could spark inflationary pressures if the rate is down. Generally, a decrease of the figure is seen as positive or bullish for the Great Britain pound, while an increase is seen as negative. But more on that, Alexander is going to speak about a bit later on. So if we look at the historical performance of this reading, we do see that it has been gradually decreasing from 4.6% in February 2013 to 3.5% for the month of February, indicating that the UK's economy is sort of on the positive track. Yeah, showing good signs for the country's economy. Further on, if we look at the Bloomberg poll of economists for this particular reading, then we see that, we see that they are quite unanimous. At least the top 10 of them are very unanimous that the reading should be at 3.4%, meaning that a slight improvement can be expected. But where the problem comes is that we will now have a look at the UK claimant count change data, which actually tells us a bit the opposite thing. So let me just put again the right chart on the whiteboard. Okay, so here is the claimant count change summary, and yes, one more second, and I will be done with putting the chart on the whiteboard. Okay, so what we can see here, the claimant count rates. This is released by the National Statistics too, and if the rate is just a second, yes. So it presents the change in the number of people claiming unemployment-related benefits during the previous month, which is March in this case. And generally speaking, a rise in this indicator has negative implications for consumer spending, which discourages economic growth. And we see that the forecast for the month of March is at minus 30,000, which is worse compared to the reading of February that was at minus 34,600. So I'm very, very interested in what Alexander is going to tell us, because these two forecasts are quite contradicting. But there is one more thing that I am going to do now, and we'll have a look at the Dukascopy fundamental analysis contest to see what our traders think about this particular event and how they see it's impacting the Great Britain pound, USD dollar, USD currency pair. And here we can see that 58% of all participants voted for this event having bullish impact on the Great Britain pound. I also copied out two comments, and one is from our community member Karpa, who is bullish on this event, and he says that moderate volatility is expected, and he does think that both of the readings will come out positive, so it will be good for the pound. While another community member, Waltrud, thinks that yes, when all is good, the economy is lifting, inflation is under control, then he thinks that a very, very small reduction of the unemployed can provoke pound sale. So that's what he thinks. But to know more about the possible positive market strategy and market reaction, I will invite Alexander to the whiteboard, who will then continue. So welcome, Alexander.
Thank you, Maya. Hello, everyone. So once again, today we are discussing the potential impact of the UK labor statistics on the sterling. And even though Maya already mentioned that data will is projected to be mixed and will send mixed signals to the sterling, still I would like to point out that we're also having a release of average cash earnings, and if I recall correctly, Mark Carney's forward guidance now aims at the elimination of any slack in the economy. Therefore, steady rise on wages will indicate that the economy is improving, and therefore the sterling will descend higher. Therefore, our positive price trading strategy will be based on the cable, and we see that during the last 3 hours the pair has performed a strong rally that equals 50 pips, and actually it can be the fact that traders are already pricing in the potential positive impact of the fundamental data, and we see that the pair is still appreciating, and the price currently stands at 167.83, so just a couple of pips left before the take profit is reached, and we see that the trade take profit is placed at 167.91, and this level is represented by 4-hour resistance, and slightly higher we're having daily resistance and a strong psychological level of 168. Therefore, that will be a key level for long traders. However, keeping in mind that the pair has been strongly bullish in the recent minutes, still we do not expect that the pair will be able to reach 168 level. Regarding the statistics data, we see that during the last 5 months, the cable was strongly and highly volatile after the release of the data, and we see that the usual volatility was in range from 13 pips up to 27 pips, so meaning that data has a strong impact on the cable. As already mentioned, the potential take profit is placed at 167.91, and regarding the stop loss, we recommend placing it around daily resistance at 167.62. Regarding the market sentiment, we see that traders still believe that the pair will depreciate, as more than 58% of open positions is short. Meanwhile, traders are selling the sterling in 56% of all cases across the board. And one more thing to mention, that's pending orders, obviously. Sorry guys, so the data is already out. The pair has obviously penetrated the take profit. So we see that claimant count rate stood at 3.4%. However, the claimant count change came practically in line with analysts' forecasts. So nevertheless, that's still quite positive data for the UK economy. And obviously, the sterling has received a strong bullish bias from the fundamental data. And even though we do not expect the pair to penetrate at 168 level, still we see that the pair is already trading 12 pips above this threshold and approaching 4-hour resistance, which is placed at 168.20. And I will be also grateful if my colleagues will be able to write the unemployment rate in the chat. So just a second, guys. So actually, the unemployment rate that stood at 7.2 declined to 6.9%, and that meaning that the indicator has penetrated the threshold implemented by the Bank of England. And actually, the market reaction was quite predictive, as we know that Bank of England has been under the pressure during the last several months to start raising rates sooner than expected. And the unemployment at 6.9% and the steady decline in the claimant count rate will obviously add even more pressure on Mark Carney. Thank you, Anna. Mine, sorry. Regarding the pending orders, here we see that traders believe that in a medium and long-term perspective, the pair will appreciate. As in the 50 pips range, we see that there are almost 54% of pending orders that are placed to buy the pair, while in the 100 pips range, even more of them are placed to buy the sterling versus the greenback. Another fact that speaks in favor of pairs appreciation, that's obviously technical indicators, and here we see that indicators on the 10-minute, 30-minute, daily, and even monthly chart are sending buy signals, meaning that short, medium, and long-term perspective is bullish for the pair. And just to conclude, so that's a daily chart on the cable. Here we see that the pair has been trading in the boundaries of the channel up pattern since October, meaning that already for more than a half a year, the pair is trading in a strong uptrend. And during, speaking about key levels for long traders, that's obviously this year's high and weekly resistance at 168.45, so 44. Yep, and yeah, I guess long traders will now aim to this level. I will try to penetrate it. However, also we should keep in mind fundamentals from the United States and Janet Yellen's speech later today, and obviously that will also have a strong impact on the cable, and that will be another catalyst for the pair. But nevertheless, keeping in mind buy signals from technical indicators, pending orders, as well as strong fundamentals from the UK, the outlook for the cable is strongly bullish. Yep, I guess that will be pretty much from my side. Yep, and I'm giving the floor back to you.
Yes, thank you so much, Alexander, for a great presentation of the technical part of the release. Yeah, so the data is out. The UK claimant count rate was in line with the forecast at 3.4%, as you see in the table, while unemployment claimant change came out slightly different than the forecasted reading of minus 30,000 at 30.4 thousand. So that was all from our side. I wish you a nice day, and in the meantime, I also encourage and invite you to take part in our daily research webinar at 12 GMT. That's all for now, and see you later.